Hello everyone, my name is Christian. Welcome back to Tekpon. Today our guest is Steve, the Chief Marketing Officer at Ordway. Hello.
Hi everyone. Hi Christian.
Nice to meet you. Please tell us what your company does.
Yeah, so Ordway, we think about ourselves as a finance platform for innovative business models. So what does that mean? We sell to a lot of technology-centric as a service company. So SaaS, cloud, fintech, marketplaces. Actually, a lot of the target companies that you have in this podcast series would be good target customers for us. And the challenge that we're helping them with is that there are all these entrepreneurs and founders out there that can come up with these really innovative business models and creative pricing strategies and different ways to monetize their product. But often their ideas greatly exceed what the available capabilities in the market are from the billing systems and the systems that need to do accounting and financial reporting. And no one really thinks about that when you're dreaming up the pricing model where I'm going to charge people based on the brainwave activity of how they react to this video. No one stops to think, can we actually measure that and bill for it? And, it's not just the founders in general, just over the past 5-10 years, really, the technology industry is sort of taking over everything, right? Mark Andreessen famously said that software is eating the world. And you can definitely see that. A lot of the companies that we work with and some of the bigger SaaS companies, they're not just selling technology, they're selling financial services. They've got credit card payment processing. They're doing payroll for employees. They're offering small business loans. They're making interest income off money market accounts when they've got funds in transit. They're selling marketing services where they generate revenue off affiliate traffic and charging people for downloads off their marketplace like an Apple or a Google would. And even some of the more innovative cloud companies are doing interesting things. But the most important part of this whole process that people often forget is once you get a signed customer contract or get them to click on the website and enter their credit card details, you've got to turn that contract into cash, into revenue, and into financial statements that you can use to go out and raise capital or raise debt or get a line of credit. And that's the kind of boring stuff that we do. It's finance and accounting, but it's critically important to the cash flows and the way that you run the business. So.
Absolutely. I understand. Thank you for sharing. What products are you offering?
Yeah, so we do 4 things. The first of which is billing, which can be quite complex. So we'll take a customer contract out of a CRM system or take consumption data out of a SaaS or cloud product, and we'll turn it into line item charges and an invoice that you can send your customer. The second thing that we do is accounts receivable. So we'll help you actually collect that money. Just because you send someone an invoice doesn't necessarily mean that they're going to pay. So companies have all different kinds of billing frequencies. Some companies bill once a month, once a quarter, once a year, once a week, once a day. They have different payment terms, net 10, net 15, net 30, net 60, net 90, different ways to pay through credit cards, through bank account transfers, wire transfers. Some people still pay with paper checks. You've got PayPal and Google Pay and Apple Pay. So there's a lot of complexity around just collecting the payment and tracking that. The third thing that we do is around is an accounting function, which they call revenue recognition, which is if you use IFRS or generally accepted accounting principles, how you recognize the revenue on your income statement and the associated line items on your balance sheet and your cash flow statement. And then the fourth thing that we do is help companies with the metrics that are important for recurring revenue business models. So the industry's developed sort of its own accounting and financial reporting language, things like ARR and net retention, gross retention, churn, magic number, CAC, LTV, all these various different things.
Amazing. And what is the pricing for Ordway?
Yeah, so as a billing company, we have to support a very diverse range of pricing models, but we actually find that the finance and accounting folks, even though their product teams and their founder might have very creative pricing strategies, they want to keep things relatively simple. They want to have a more predictable line item in their budget that they can plan on rather than prices going up and down. So we have more of a fixed fee model. It's based on the dollar value of transactions that are being processed through the system. We don't take a percentage of that, but we sort of find where you are within a range. If you're doing 50 million to 75 million a year in transaction volume, then we'll be able to give you a fixed fee price that you can count on for the year or 2 year, 3 year contract. Now, some customers want more services than others, so we've unbundled the product a little bit in the past couple of years, and they can buy premium customer support, or they can buy better types of integration to their various different systems, or things that extend the functionality of the product. We also do have startup pricing for seed, Series A companies that are just getting started that maybe don't have the budget yet to afford our normal pricing.
Thanks for sharing. I'd love to know how competitive is your space and how you differentiate from other solutions.
It's actually extremely competitive. There was about $1 billion in capital that went into the space in late 2021 and throughout 2022. So even though the overall SaaS market was sort of trending downwards in terms of valuation and new funding rounds, this was a space that there was quite a bit of money put into. And I think it's because a lot of the bigger every one of the big tier one investors, from Tiger to Sequoia, Excel, Insight, all of them have put money into the space in the past 2 or 3 years. And I think people are starting to realize how complex this billing and revenue stuff is and how important it is. So the way that we try to differentiate ourselves is, I could get into the weeds and talk about product features, but I think an easier way to think about it is most of the competitors do a lot of the same 4 things that we do, but have gotten there in a different way. So whereas we built a product organically to do all 4 of those things with the same code base from the ground up, a lot of the competitors have done acquisitions or partnerships. So maybe they started out doing billing and they acquired a revenue recognition company or a company that helped you do SaaS metrics. And so the problem in finance is when you've got all these different acquired systems and they're not integrated, they're using different databases. And in finance, at the end of the month or the end of the quarter, everything's got to tie up. It's got to zero out. It's got to balance. If you remember, if you took an accounting class in college, credits and debits need to zero out, right? And so they spend a lot of time reconciling what's in one database versus another, and you end up losing your whole weekend over this sort of thing. So we think having a single database is a better approach. The other area that we tend to differentiate in is around how we implement. So there's sort of 2 extremes in this space. There's one set of companies that are more of a product-led growth model, and the customer's in a DIY self-service type of mode. Here's our API docs, here's our documentation, here's a community. If you have a question, go ask the community, and hopefully someone answers. Good luck. And a lot of the more technical buyers are comfortable with that. They'll just figure it out. They view it as a challenge. The business buyers don't necessarily like being on their own. On the other extreme, historically, the billing space has been notorious for mega projects that never end. When I first started my career, I had a bunch of friends that were doing consulting for billing projects, and they would say it was the gift that kept on giving, because to be multi-$100 million projects that would just go on for decades and never get finished, and you keep billing the client at an hourly rate. So there's a number of other older competitors that they will require you to hire a big 4 or a consulting firm to come in, and they bring an army of consultants in, camp out for 12 to 18 months, and 2 years later, they're still there, and you've spent millions of dollars, but still don't have a product that's working. So we're trying to be in the middle. If people want to be more on the DIY side, we try to give them some quick recommendations and let them be on their way. If they want more hand-holding, we also have a white glove type of implementation service. So,
great answer. I love it. I'd like to know your favorite customer success story. So a customer that came to you and how you helped them.
Yeah, that's tough, because we have so many. One of the things that I love about working at Ordway is we're getting to meet with all the innovative startups. As soon as they get seed round funding or Series A or Series B, they show up to us talking about how they're going to scale their finance processes. So we often get to talk to them early on when they haven't quite figured out product market fit or go to market strategy or those sorts of things. So there's a lot of different choices. I would say there's a company in the US that does audio and video transcription, which these days, doing cloud-based transcription is really not all that new relative to other things that are out there. But what I really like is the way they've innovated around their commercial approach. So they can go to their customers and just be incredibly flexible with how they want to do business. They can say to them, look, if you want to try our product and you're not ready to commit to any kind of long-term agreement, you can just pay as you go month to month. You're going to pay list prices or something close to that. If you have just one project that you want us to do, we can do a project-based approach. If you've got a relatively consistent level of need for us to take audio and video recordings and turn them into closed captions or create subtitles or do the things that you would need for SEO, we can do that for you on a recurring basis with a predictable monthly fee. If you know how much you're going to use in a year, but don't necessarily know month to month how it's going to work, you can buy these things called prepaid credits, where you buy maybe, 100,000 minutes worth of transcription and just draw down upon that as you need it. And they even have the ability to do what they call a spend commitment, where you don't necessarily pay anything up front, but you agree, maybe I'm going to spend $100,000 in the next 12 or 24 months. And if for some reason I don't do that at the end, we're going to do a true up where we're either pay the difference or you're going to renew for another bigger and even better contract. So that's one that comes to mind. But
how important do you think is this flexibility when it comes to pricing?
How important is it for us or for the customer, or
in general for any business? Let's say, how important is it for them to be flexible and open to get multiple offers and adjust to the buyer?
Yeah, I think it's becoming increasingly important because we're seeing what I call commercial innovation, where companies are not just competing based on their product features or the customer experience, but how flexible and how easy they can be to do business with. And that's really more stuff around finance and legal. So it's how flexible can you be on pricing and discounting, the contract terms, innovation around even credits and refunds. Are you willing to sign up for a service level agreement that, guarantees a certain amount of uptime or certain performance or a certain level of functionality? Are you willing to only charge when I'm successful? So there's some companies like that have a chat bot, they only charge you if the customer gives you a thumbs up or a smiley face at the end and says you solved their problem. Otherwise, they don't charge you for the transaction. So it's becoming increasingly important. And especially in this economy, it's not just the pricing, but the flexibility around the payment terms that's important as well. A lot of companies, they don't necessarily want to pay for a full year upfront like we've traditionally had in the SaaS model. A lot of them want quarterly installment payments or monthly payments, or maybe I pay 20% upfront and then I pay the rest as I go along. So the ability to have that kind of flexibility around how you price, how you structure the contracts, how you structure payment terms is becoming really important.
Thank you for sharing. Yeah. I'd love to hear the story of you joining the company. When did you join exactly?
I joined in March of 2021, and at the time it was absolutely crazy. I've been doing in the software space for over 20 years now, and I've never seen the competition for talent that existed when I was out interviewing. I probably had 10 different companies that I was interviewing with. But the reason that I chose Ordway was there's just this huge problem around recurring revenue. And when you go to conferences, you see people from sales and marketing and go-to-market organizations up on stage, or product and engineering. Those are the ones that are the heroes and tend to get all the credit in the space. But I've worked on and off in the financial space for the past 10 or 15 years and gotten to really appreciate how challenging the finance department's job is. And I saw just this changing of pricing and business models, not only in the tech space, but in manufacturing and media and entertainment. Everyone's trying to transform themselves into an as-a-service model. Maybe not the primary model, but one of the models that they use. And so, the billing, the pricing just gets incredibly complicated. We can price things based on the way we've always done it, based on the number of users or the amount of revenue or the number of employees or locations you have. But increasingly, you're seeing people bill based on the number of hours or minutes or seconds or milliseconds you're using a product, the number of API calls, test runs, gigabytes of data transferred. People are taking a percentage of the gross merchandise value processed on an e-commerce site, or the percentage of the assets under management, or a combination of all the above. And so there's this huge challenge that companies have where at the end of the month, they've got to take trillions and trillions worth of data points. They've got to figure out how to build a customer. So everything's got to be sorted by product and by customer. There might be duplicate transactions that need to get thrown out. There's incomplete transactions. There's things you don't bill for. And all that stuff's got to get calculated. There's discounts that have got to be applied. Sometimes a lot of these SaaS and cloud companies will offer discounts to incentivize people to use the product more. So you might get a 10% discount if you do more than 1,000 transactions per month. You might get a 20% discount if you do more than 5,000, or a 30% discount if you do more than 10,000. But you can only get those discounts when you sign up for a long-term contract and agree to buy prepaid credits. And then there's this whole other accounting that needs to occur where if I bought 10,000 credits and I use 2,000 this month, how many are left, on a month-to-month basis? So I saw this, both as a executive at a SaaS company and also having worked in the finance space. And I just think it's a massive problem to solve. So that was, sorry, long answer, but that was really what attracted me to Ordway.
Great answer. Thank you. Thank you for the answer. I'd love to know your biggest challenge since joining the company.
Well, my personal challenge is actually been just trying to figure out all these different models, which is a bit of a moving target because almost every day, any day goes by, you talk to some new blockchain or generative AI company and they're doing something that you hadn't thought of. So it's even though we pride ourselves on being a lot more flexible than some of the traditional providers in the space, keeping up with it is quite a challenge, right? And so on my team in marketing, we actually have a research function and content marketing function in addition to other things. And one of the fascinating things has been not just the billing, but understanding all the different SaaS KPIs that companies are reporting on. So take something simple like how many customers do you have, which sounds like a boring metric that anybody should be able to report on, but it's really anything but boring. You start to ask some questions. Well, when am I measuring my customer count? Is it at the end of the quarter, or am I taking an average over the 90 days in the quarter? Which customers am I counting? If I haven't billed someone in 6 months, 12 months, do I count them as a customer? If they're on month to month, do I count them as a customer? If they're on a legacy product that's going away, do I count that? And then you get all these tricky situations. If I'm doing business with 10 different divisions of Procter & Gamble, is that one customer or is it 10? If I have a reseller that's selling my product and they've got 1,000 customers, do I count that as one or is it 1,000? And so every one of these metrics that the SaaS companies use on a day-to-day basis, whether it's net retention or ARR is another good one. When do you start reporting ARR? Is it when you sign the contract, the booking date? Is it when the contract effective date starts? Is it when the product's live? And what do you include in ARR? Can you include usage-based fees? Can you include month-to-month customers, professional services? So there's all kinds of companies that are doing this. So the challenge has been to try to figure out how to actually be helpful and write thought leadership and educational content that helps our customers understand all this stuff. And it's incredibly complex because I've yet to find someone in the industry that understands it all. They understand their particular business model or maybe the industry segment that they're in, but you jump to another segment and things work differently. So it's really been one of the steepest learning curves that I've had to climb. And I can only imagine if someone's earlier in their career in finance trying to understand all this stuff is quite a challenge. So that was one of, that's been kind of our big mission, is try to decipher it and communicate to people how it works.
I appreciate the transparency. What has been your most successful go-to-market strategy for getting new customers?
Yeah, that's a great question. There's a big focus right now. All the SaaS and cloud companies have. I have a lot of friends in this space, and they're going all. During COVID, everyone went all in on digital, and so you talk to a lot of founders and they'll say, well, we're really just focused on content and SEO and digital ads. Account-based marketing type of ads running on Facebook or Google's display network or LinkedIn. And those are all good strategies, but I'm much more just data-driven. Like, I'm trying to find out where is the community that we're trying to go after? Where are the customers? And I don't have a bias of whether it's digital or real world. We've actually found that some of the best lead generation venues for us are actually trade shows. Like this month, there's a big show in Silicon Valley called the SaaStr Show, and there's 15,000 SaaS executives. Many of them are CEOs, and it's just an unbelievable level of senior level decision makers in one place at the same time. And so that's been a huge show for us. Also, just webinars, but getting into communities where SaaS finance leaders tend to congregate. There's only a handful of them. has been good. And also just make, the number one thing I say at every company is you actually, you don't need marketing, or you don't need to spend a lot on marketing if you have a good product and you have happy customers, because word will just spread through word of mouth buzz. And that's definitely true in this space. The SaaS community is very plugged in on closed Slack communities, LinkedIn, they all talk to each other. So a lot of our leads are actually organic word of mouth customer referrals that we've gotten just by our implementation and product teams just doing such a good job of keeping the customers happy, which makes my job easier, right? I don't have to find as many leads through paid programs. So.
Amazing. Congratulations. I'm super happy for you. I'd love to know the vision for the future of the company.
Yeah, I think it's trying to stay one step ahead of all these different things that I've been talking about. Just the complexity continues to rise. If you look at what some of these SaaS and cloud companies are doing, AWS, Google Cloud Platform, GCP, Azure, Oracle Cloud, go take a look at some of the newer offerings that these companies have. I mean, you can go up there and model digital twins for manufacturing to simulate real world environments. They have productized offerings to manage robot fleets, to sequence DNA in the healthcare space, to facilitate communications between satellites that Elon Musk is launching into space, and ground stations, quantum computing. And so, the diversity of the products that are being introduced, and those things I was talking about before with embedded finance, Bill.com makes a lot of money off processing payments. Shopify makes money off processing small business loans. ServiceTitan will do employee payroll. Intuit will sell you workers' comp insurance. Just the diverse range of business models and products is going to lead to even more innovation in monetization strategies, pricing, contracts, payment terms, all these different things that kind of boring back office things, but important to being able to collect the cash and recognize the revenue and be able to take financial statements out. This stuff is critical if you want to go do an IPO or raise, another round from the venture capital or growth equity community, or even get venture debt. All this stuff's critical. So our vision is really just to try to stay one or two steps ahead of the industry on all this stuff, which is quite challenging, but fun. For those of us that love emerging technologies and thinking about the future, it's a fun challenge.
And more on the personal side, I'd love to hear how you started your career. So what's your story?
I have actually a very different journey than I think a lot of CMOs. I actually started, I have an engineering degree. When I was in college, I wanted to work for SpaceX and launch satellites into space and get humans to Mars, except I was about 20 years too early. So I missed that opportunity and ended up going into the software space instead, which is almost as fun. But I came out of school and I was actually a developer for a couple years. But I found myself really more drawn to the business side of things. Someone would hand me a spec for a piece of software and I'd be questioning, well, why are we even writing a piece of software that does this? I remember I was doing a consulting project for a telecom company and someone asked me to write a program to change the name of a street. Well, how often do people actually even change the names of streets? Does this even really happen in the real world? So I moved into more of a management consulting role and then got into product management and product marketing and eventually over to the marketing side. But I think why it's been a great fit for me is it's a really challenging role to be in a CMO role. If you think about the diversity of skills that you have to have, you're selling technology, you're using technology, so you've got to be technical. Marketing these days, you've got to quantify the impact on the business. You've got to be analytical and data driven. You've got a relatively large budget that you've got to be accountable for. So you've got to understand finances and spend management and budgeting. But then there's a whole creative and strategic side to it too, where you're working with outside agencies, maybe on a new version of your logo or an ad campaign. You're giving feedback on colors and people's emotional reactions to things, and what the top line messaging. How do you get your whole value proposition into 5 words that are going to show up on a Facebook ad and get someone to click on it? There's a strategic part to it where you work with a lot of the analysts like Gartner and Forrester, and you're having to pitch them on the things that we've been talking about. What's our vision? Why are we differentiated? Why are we doing things differently than the other competition. And, you've also got to be an evangelist internally as well, not just externally with the sales team. You've got to stand up at the annual sales kickoff and make them believe that this is the best place to work for the next year and you're going to make more money than you have any other year in your career. And here are the various different programs and ways that we're going to enable you to do that. So, that diverse range of skill set for me is what's attracted me to marketing and kept me in it, because you get to use the left side and the right side of your brain pretty equally. And that's rare in careers.
Exactly. Wow, super interesting. I have one last question for you. I really enjoyed our conversation. What's your favorite SaaS product apart from Ordway?
One thing that's been immensely valuable to me in the past couple of years is just the ability to take unstructured data and turn it into something useful. And by unstructured data, I'm talking about videos and audio, images. So things like Gong and Chorus that's owned by ZoomInfo, or even newer entrants like Fireflies.ai is something to check out. But they can take sales discovery calls or quarterly business reviews that customer success teams are doing and turn them into transcripts that are now text-based that you can run analytics and search on things for. And so there's a whole new set of data available to us as marketing and also sales leaders and customer success leaders to be able to analyze not just customer sentiment, but trends, questions customers are asking, if you think about it from a content marketing standpoint. And I never have the time to sit and listen to video recordings or audio recordings, even though they might be available. It's hard to know which ones are going to be useful, which ones are not, where exactly in the video. Not everyone takes the time like you guys do with the Tekpon podcast, where you put the different chapter markers in there and it makes it easy to scroll forward ahead. You don't always have that experience. So those products are worth their weight in gold to me, just because the level of insight that I'm able to get in a relatively short period of time has just been game changing. So,
thank you so much. Is there anything else that you want to share on today's podcast?
I've been talking a lot, so hopefully people found it useful. I mean, this is a problem. I think this idea of commercial innovation is going to continue in just about every industry segment. We have customers in marketing and sales tech, ed tech, HR, finance, databases, AI, ML, cloud infrastructure. It's really a universal problem that I think is going to continue to compound over time. So hopefully folks listening have gotten a little bit of insight and a better appreciation for some of the things that the finance team has to wrestle with at their organization.
You did great. Thank you so much.
Thank you, Christian.